Good evening. This is Doc Severson for the Theotrade Nightly Report for Thursday, June 9th. I'm going to start out tonight's report with the 30-year Treasury bond futures, or the ZB, and just talk about this sort of runaway move that we're seeing. You can just see this, if you look at this, you can see this sort of exponential curve that is slowly going towards an infinite slope to the upside. So this is typically what we see when a bubble is being formed, is a move where the slope just gets increasingly or more exponentially vertical until the slope is almost infinite. Now along the way, that's on the monthly chart. Now along the way, we're going to see things like this, where we're going to see a consolidation pattern up here, and just a little flagpole and a flag setting up and breaking out to the upside. So many people have been chasing after this, this breakout to the upside here. But what we have is kind of a game of chicken between the bond market versus the Fed. If the Fed raises rates, then the bond futures have to go lower. But right now, basically what the bond market is saying is that it doesn't think the Fed has any intention of raising rates. Not now, not anytime soon. So our clues for this as to when the bond market will blink are going to be based on price action, like everything else. And reversals happen from the inside out. So they're not going to happen. You're not going to see a reversal on the monthly chart. What's going to happen is on the daily chart, you'll see this reversal start, when it does occur, by setting up a lower high and then a lower low, and you'll start to see that fade down from that point. We really haven't seen that so far. All we've seen is just major consolidations followed by breakouts, followed by more consolidations, followed by more breakouts. So we'll see this happen when one of these consolidations actually breaks to the downside from there. So if you're curious about playing this market, you can also use the TLT somewhat as a proxy, as this is an ETF of the 20-year Treasury bonds, right? So this can be an effective instrument, and actually the TLT is fairly liquid and not a bad underlying instrument to trade with options. Now let's move over to the S&P 500. Now, one of the things that I'm always trying to figure out is what the character is of the current market. You can see that most of the time, the character of the market is what's called quiet and trending. Quiet and trending. So this is not really a new concept. This is something that the turtles were using 20 years ago or longer, right? So quiet and trending is what we're going to see 80% of the time. And most bull markets are relatively simple to trade because they're very linear. In other words, they feature the same type of price action every day, where we get kind of this groundhog move of futures slightly going lower and then we press higher into the end of the day. Well, when you do that day after day after day, this is where you get trends like this that just seemingly go forever. So again, quiet and trending is what we get most of the time. Most of the time, over the last 20 years, you can see this is the majority of it. So from here, though, we get to different types of markets. When a market tends to top out, we get this topping pattern, which leads to price action that I will call sideways and volatile. So the realized volatility really picks up big time during these times. And right now we've been in one of these for about the last year and a half or so, inside of a 300-point range. And through much of that has been very, very volatile. Sometimes we've had very little volatility, like last summer. But overall, we've been in this very sideways and volatile range, really since near the end of 2014. So long time to be in this range, almost 2 years now. Now, two things can happen when we have this type of price action, which is sideways and volatile. We've had this recently in 2010, also in 2011. So as you can see, a couple of things can happen from here. Either we break into another type of price action, which is trending and volatile, and this is code word for bear market. So we typically don't see these too often, where we have trending price action and it's volatile, and that's always going to be to the downside. Okay, so what we have to figure is anytime we see sideways and volatile, it can do two things from there. It could either break into quiet and trending again, like it did in 2010 and 2011, or it can break into to the downside into trending and volatile like it did in 2000 as well as 2008. So the big question right now is what's going to happen to this extraordinarily large range. Now, I've been building the case lately that I am fully prepared for the price to break out to the upside, which I seem to be in the minority opinion on something like that. And one of the reasons why I feel that that is the case is because everybody seems to be banging the table right now for the price to be down at 1800 or down at 1500 again. And I certainly was in that camp back in January, February, when we were going through a lower high, lower low scenario on the S&P. I thought this was truly the beginning of a full-on bear market, and we were heading for 1600 on the S&P at least. But since that point, what has occurred is that the market has turned into a quiet, this entire move has been quiet and trending again, using the same type of Groundhog Day price action where we start out the day a little bit weaker and then we press higher into the close. It's almost like a replay of all of this stuff back here. Now, looking at the bigger picture here, I have no idea what's going to be the catalyst to break the market above all-time highs and force all that short covering. It could be as simple as the old search for yield, because right now there is no yield, especially with the bond market going higher and higher and higher, essentially pressing rates down to nothing. It could be simply a case of the fact that this is really the only place in the planet that's paying any kind of yield. And the market has no choice but to go higher based on accumulation of stocks. It could be that simple. And yes, I'm fully aware that we have all the bad news in the world right now with a lousy jobs report. We have an earnings recession going on. We have all this printed money that's out there that has to find a home, and eventually somebody's going to have to pay for. But sometimes the simplest thing that I do is just tune out the news, because actually the market, if you just pay attention to what the price is telling you, tells you what is more than likely going to be happening with the market, or at least we can be open to responding when the move comes. I know that if we do see a move break out from here, there's going to be so many people with slack jaws standing on the sidelines going, wait a minute, that's not supposed to be happening. So ask yourself, how many times have you seen a move happen that you didn't expect, and you sit there and you're frozen into indecision? You're a deer in the headlights because you didn't expect that to do it. So what you've got to do is, with the price right up here, you've got to free yourself that you're okay with the market breaking higher from here, even if it's not going to be a longer term thing. Maybe it's only going to break higher for 6 months and come back down and collapse in a heap. But we have to respect that breakout if and when it does cap. Secondarily, if the price fades down from here, I will respect that as well too, because it means that we're just still stuck in this range for perhaps a few months or maybe another year longer. And I'll finish out today's report by looking at the gold futures, so the /GC here. On the monthly chart, what's going on is, again, still a downtrend here. So it takes quite a bit to reverse these downtrends. So what I'd like to see eventually, when this monthly swing finally finishes out wherever that is, I'd love to see this pull down to print a higher low and then ultimately a higher high, and that will show us that we have a major reversal in play. So within the monthly swing, though, we're going to be seeing a lot of action here. So initially a weekly swing higher, consolidation. So what's going to be important is that the price of gold is able to get above and beyond this consolidation at 1300. Otherwise, if this ends up printing a lower high over here on the daily chart, this could become a rapid move down, and maybe that's going to signal the beginning of this trip back down here. Again, a lot of this is going to be triggered based on when the market overall senses that the Fed will actually be doing something, and doing something in earnest, and not just their jawboning from all the associated governors and presidents that have no voting rights. So that's it for today's report. Stay tuned for this weekend, as Don will give you the weekend report from TheoTrade. Take care, folks. Have a great one.